Hi everyone, Mark Yestrau here with Bridgeport Asset Management. Would like to take a few minutes to talk today about an actual real-life scenario that presented itself recently with one of our clients. This particular client is considering retirement at 55 and happens to be an accountant. Now, this accountant is actually struggling with the decision of taking the defined benefit annuity from his current employer when on retirement, or transferring his assets out of the company's pension plan to Bridgeport, so that we can manage the assets on his behalf. So the choice effectively is, does the client choose pretty much a guaranteed monthly payment from the company's pension plan until his passing, or does it make more financial sense to have self-management of the account, to direct Bridgeport to take those funds and invest it and grow it over time, all the while drawing on that fund in his retirement? So there are factors that come into play. Life expectancy is a big one. One of the larger ones as well is, are those defined payments offered by the company's pension, are they indexed to inflation? In some cases they are. In this particular client's case, they were not. So that's a very large, very big consideration. We all know that $1 today won't buy the same thing a year from now. Another thing that comes into play, this particular client does not have any accumulated RRSP contribution room. And so what that means for this particular client is a portion of the funds that he would pull from that company pension would be subject to tax. Had he had some RRSP contribution room, he would have been able to move a portion of that directly to his RRSP, avoiding a potential tax hit. So these factors come into play, and the team here at Bridgeport got to work and crunched some numbers. And it didn't take a whole lot of work to come to the conclusion that there was a much better option financially in terms of the inflation factors, and also in terms of when the client were to pass, whether or not those annuity payments would continue on to his spouse. In this particular case, only 60% of his guaranteed payment would continue to their spouse. So we take these numbers into consideration, we do some math, and again, it became very clear what the better financial option was for this particular client in this particular case. The rules surrounding pension transfers vary from plan to plan. So it's really important to have somebody take a look and evaluate the options and come up with a decision. So please, by all means, feel free to reach out to Bridgeport if you find yourself in a similar situation. We're happy to spend some time and offer an opinion. Thanks again for your time.